Mitchell Stankovic and Associates and the Underground Ideas into Action presents The Underground Chats, authentic conversations with credit union thought leaders. Today's chat, Big Ideas in 2021, with Gary Perez, President and CEO of USC Credit Union.
Gary, it's great to see you. You're right. We have known each other for a while. A long time. And so you were saying, how are you doing? How's the family doing? How's the credit union doing?
Well, personally, my wife and I are doing very well. I've got 3 adult kids, and they're healthy, and they're happy, at least as happy as one can be in these anxious times. And they're all still employed. Right, and they and their spouses are all well employed, and they're doing exceptionally well. And we just welcomed our 5th grandchild to the family. So, these are good times for the Perez family, despite the crisis. And with respect to the credit union, I dare say our credit union is doing about as well as can be expected. We think in most ways we're doing amazingly well. But the qualifier there is that we have to redefine what success is and what well is. So if it's defined by ROA, we're in capital, we're doing horrible, right? So we're challenged like every other credit union by an influx of deposits. We're challenged by margin constraints, and we're challenged by all the funds that we're placing in provision for loan losses, simply because we still don't know the severity or the duration of this. We've got tens of millions of dollars in deferred loans that we're keeping our fingers crossed, but you still never know. So by that standard, we're not doing so great, but by the standard of what we're doing for our members and what we're doing for our staff, I think that we're doing amazingly well. The team has pulled together, and we like to think that we were built for this. That we're here to help our members. We're here to make sure that they're healthy and happy and well taken care of, and we feel the same way about our team.
Yeah. It's interesting, isn't it, that I had a CEO years ago described for me, probably through our, 2009 situation. But the allowance for loan loss is like putting money from your checking, from your savings account over to your checking account, or vice versa. That what it comes down to is that you still have it, but you're allowing for the future. So it's putting it into your savings account. So the whole idea that net worth is suffering is really truly a number. It's really not, if you will, the reality. We hope it doesn't become the reality, but this has been quite a year of contrasts.
So. Sure. I'm an old school cat, and I'm an old school credit unionist with old school, some say archaic and no longer relevant ideas. But we've historically maintained just the capital necessary to offset or bear the risk embedded in our balance sheet. And that served us well over the years. We operate on really thin margins, and we keep expenses in line so that we can continue to operate on very thin margins. But it comes back to bite you in extraordinary periods. So we were challenged in the 2008 to 2012 period, and we're similarly challenged now. I think the difference is that we qualified as a low-income credit union, and we were able to secure secondary capital, and it's been a boon for us. And we've grown. Now, again, we're not a mega credit union. We're a $700 million shop, but we've grown over $100 million in less than 11 months. And it's taken our 8% capital target down to closer to 7%. And the secondary capital was it was a boon for us, and it's allowed us to continue serving our members without worrying about any PCA concerns.
Well, from a perspective, you were talking about your credit union, and I want to put it in perspective. You're also USC's credit union, so you're working with students, you're working with their families. So not only have you had the disruption, if you will, to the fact that we have COVID and we have the fear associated with that and the lockdowns associated with that, but you also have students that are going through the challenges. So it makes me, whether it's an old-fashioned idea or not, the reality is credit unions were formed for these types of periods.
Right.
So when I think about your members and I think about $100 million, I mean, that also demonstrates there's a lot of trust at your organization for the credit union. So,
yeah, this has been, it's been a challenging period, but it's been an uplifting a period as well, because our commitment to our members is returned to us by way of that trust that you just mentioned. And look, at all credit unions are challenged by this crisis, right? And none of us were prepared to address the worst economic crisis, the worst health crisis in 100 years, and then this period of trying to address 400 years of racial injustice, all concurrently, right? So we're all in the same boat, and several pockets within the system have unique challenges. I think that the challenges of university credit unions are certainly unique to us and still a bit scary, right? So as everything transitioned to work from home, and certainly all classes were converted to remote. We have tens of thousands of members who are directly employed by USC to serve students when they're on campus. So certainly at the outset of the crisis, when you look at the number of members that will likely or that could possibly lose their jobs as a result of the transition to online learning, we couldn't put enough away to allow for those losses. Now, thankfully, USC has not had wholesale furloughs or layoffs. So we're still concerned. We still have tens of millions of dollars in deferment, but knock on wood, we haven't seen an extraordinary increase in actual loan losses. And then with respect to our students, we, like other university credit unions, incredibly beholden to and responsible for doing right by our students. We've had a student on our board of directors for the last 25 or so years. We were at one time the nation's largest originator of guaranteed student loans. We've now transitioned into private student loans. We know that our future is tied to our ability to serve our youngest members right now. And, we've been impacted by that because, normally we open thousands of new accounts every year for incoming freshmen. This year, we opened a fraction of those. We don't have the same reach to them. We don't have the ability to connect with them as we've done before. And we're having to learn, new tricks, if you will, develop new strategies to communicate with members, both our domestic students and our international students. And frankly, it's been a challenge. We're getting better at it. And we have some new things we're going to try, but it's been a challenge, no doubt about it.
Well, I want to jump in. You said something about the complexity of your membership that frankly I hadn't thought about. The service industry, the people that take care of the students, take care of the university. We have that. Obviously, I live in Las Vegas and our business is out of Boulder City. And so we're feeling the ripple effect of not only the jobs, if you will, that are lost, but basically, are they going to be hired back? And I hadn't thought about it, frankly, until you mentioned it, Gary, how impactful it would be, not only for the students and their families, but for the community that you call the university.
Absolutely. We see it every day, Sue. Um, our people, though most of them are still employed, basically, due to the generosity of the university. Yeah, everyone would understand if they laid off everyone tied with student services on campus. They have not. That doesn't mean that they will continue to do this or can continue to do it, even though they endeavor to do so. And it's that anxiety. It's helping them and reassuring them that we'll be here for them if the worst happens. We have products, we have services, we have strategies developed, to help those who will need us most if they find themselves furloughed or laid off, like so many in Vegas and so many. Certainly, look at, feel sorry for us if you if you will. I don't think anyone would or should. I mean, we're not serving restaurant employees. We're not serving entertainment employees. I tip my cap to our friends at Partners and so many of other credit unions that are just decimated because a disproportionate share of their members are out of work. So we know that while we have the threat of it becoming really bad, right now we have it better than most.
Well, and I think, it's not a matter of, if you will, feeling sorry for any of the credit unions. I think that the reality is that when others step away, credit unions step in, and we're there, like you said, positioned to help. And I think the complexity of it is something that maybe not everybody understands, that credit unions are, their field of membership and their commitment to their credit union community, whether that involves, universities or cities or communities or associations, that all will impact this. And so you mentioned also the idea of what we've been through as a country from a social unrest standpoint, and with the whole idea that the murder of George Floyd, the Black Lives Matter, the understanding that this is a period of change and heartbreak, but it's also a period of opportunity, I think, for us to open some eyes. And I appreciate the fact that you've stepped up and that you're now part of the African American Credit Union Coalition, and that commitment to change. Will you tell us a little bit about that?
Sure. So our credit union expanded its charter a while ago. We were a credit union that exclusively served USC's faculty, staff, students, and alumni. Frankly, a trained SEAL could do my job if our field of membership was that well-established, high-performing group. But SC, unlike our friends at UCLA, just right down the street, right? You leave UCLA's campus and you're in the middle of Brentwood or Beverly Hills. You leave our campus and you're in South Los Angeles, or our medical campus in East Los Angeles. So we decided that we had a duty and responsibility to be a good neighbor to those that live in the shadow of the university. So in so doing, we're now serving a community that's disproportionately a minority, disproportionately immigrant. So it's Latino and African American. Our staff now is representative of that. 72% of our staff members are people of color. 50% of our board are people of color. And when the Floyd murder hit, my first sense, Sue, was embarrassment and a sense of shame on me. As a person of color, as a leader of color, that says, why has it taken this, to call us to action, right? It's been happening for 400 years. Why has it taken this? But it did take this, and I'm pleased to say that call to action has resulted in things that will make a meaningful change in our local community. We have a USCCU United Committee, not unlike so many other credit unions, that formed a working group that's passionate and active and refuses to let anything die. And as we've started with this notion of what we can do for our community, what can the USC credit union do as a CDFI, as an MDI, as a LICU and a Juntos credit union, then it kind of morphed into, granted, we're doing some good things for our local community through our foundation. We created an impact fund that we're now a center point now, wherein banks and other nonprofits are granting funds to our Allied Impact Fund, and we in turn are making grants to local community groups and nonprofits that are doing terrific things to uplift the lives of people of color, especially during this COVID period. So that's what the USC Credit Union is doing. But then, as I said, we started to think about what can the larger credit union community do? What can we do collaboratively, collectively, to uplift the community that perhaps individual credit unions can't do individually? And we came up with a roster of 4 or 5 things. And I happened to mention one of these during a panel discussion at the AAC, the African American Credit Union Coalition national conference, and I'm the new freshman backbencher on that board. So yeah, and it's such a terrific board with such terrific committed people. But I mentioned a couple of them, including this notion of creating a de novo credit union to serve historically Black colleges and universities, their faculty, staff, students, and alumni, as well as the residents and small businesses in the community surrounding the campus. Threw it out as something as, hey, wouldn't this be cool? And the response that I received immediately following that has been overwhelming. Responses from lions of the industry, those from natural person credit unions, corporate credit unions, vendors, trade associations, and even regulators, raising their hand and saying, this is something that we as a system, we as a credit union community can do. Yep, no one's going to get rich, no one's going to make money, but it's going to demonstrate the credit union commitment and the credit union passion for doing good and doing right for people that need us most. So, it hasn't gone much beyond the idea stage, although the idea has been sharpened. We've got this great working group of young leaders from across the country, the passionate young people who are, many of whom are graduates of historically Black colleges and universities, that have added to the idea and taken the mantle and said, look, and I'm going to work on this and you work on that. And I'm now just sitting back and marveling at the passion, the smarts, and the commitment of the young people that are working on it, and then reveling in the support. Diana Dykstra from the California Credit Union League, John Pembroke from CUES, making calls, contacting regulators. What can we do? How can we do it? And how can we do it fast? And I know I talk a lot, so sorry, right?
Oh,
but
no, I thank you so much for sharing the concept overview with me. I'm not only interested in supporting and seeing what I can do to help. I think it's combining a few things. First of all, it's the idea that we're as a industry going to collectively come together and do something that will be meaningful on a long-term basis. But it's also the idea of, frankly, the digital bank or digital, credit union. It's the idea that you're positioning it as something that that will bridge those gaps. And the article that you sent is in line with some of the research I've been doing for a while about the idea that this year has put us in a place where, frankly, the next generation is not going to really even know what a branch is. And I know that's controversial because I think it's still important that we have them for many reasons. But when we have kids, and I have my grandchildren as well, and they're sitting there on their iPads, and I've got a kindergartner that's literally able to, he's upset with grandma if I go too slow, right? That generation is going to be looking to us to offer those solutions. So I was fascinated with how you're looking at, creating a tool that should, frankly, work towards a systemic change, okay, and access, but also do it in a relevant way. And I have to tell you, I'm reminded of Kamala Harris and her discussion about her sisters across the country. And I was thinking about that, if you will, the idea of how people feel about their colleges, how they feel about their universities, and the passion there. I was curious, and after reading the briefing, one of the things that you talk about is not being competitive with the other university credit unions, right? And respecting that field of membership. And I was thinking that if everybody comes together, this wouldn't be competition, right?
Right.
It would be an overlay that people could take advantage of. Am I incorrect with that, or is that?
Well, I sure hope so. Again, I'll remind everyone that this is still a concept, right? But if it works in some way similar to what we've laid out on paper, the notion is to create a network design, such that we will provide services to those campuses, and there are 101 HBCUs, right? And one of our steering committee members has made us aware of the fact that over and above those 101 campuses, there are scores more that aren't technically HBCUs, but that disproportionately have Black and brown students. So we're going to do that as well.
So I want to just interject that I want to make sure everybody understands the new acronym: Historically Black Colleges and Universities. So that's our HBCUs.
Yes.
And so 101, and then you're saying there's another layer on that, huh?
There's another layer, and we've identified 9 HBCU credit unions. These are credit unions that were founded by and for these communities. When I started at SC, we were a $15 million credit union. I understand the challenges of small credit unions. I understand the passion and commitment of small credit unions, and we don't want to be a threat to those. What we want to be is a resource. So, what we want to do is be a first-person provider of services to those campuses without credit unions. And for those primarily small, I think the largest of the HBCU credit unions is somewhere around 30 million in assets. We all know the challenges of those small ones. So instead of being a threat, we want to offer them turnkey back office services, so that they can gain scale without merging. They can gain scale and add value without losing their identity and their passion and their commitment. So it's a concept that so many of us have believed in for some time, and I think this is an extraordinary opportunity for us to not only test but further the concept. And I've got to be fair. This notion of a digital only credit union, it's certainly not unique, and it's certainly not ours. There are a couple of pioneers in the space. I mean, we have to look at what Maurice Smith has done at local government with the Civic Credit Union. I think we have to look. So that's on one scale. The other scale is look at what Alliance done, right? It's basically moved. This is a mega credit union that's moved into a digital only space. So, and then the other example I can cite is what many of us have learned of late, which is the new Greenwood Bank, right? So this is a digital bank that's targeting the African American and Hispanic communities. And if anything, I think it helps to prove the concept, and it's something that we hope to emulate.
Well, I was also thinking as you were talking that one of my passions over the last 10 years is really this concept of a holding company environment where, we've seen self-help do that, pretty effectively. And, the idea of not having the credit unions go away, but the concept of having that back office support. And when I say go away, we know there's consolidation happening in our industry. And as we face the future, it's going to be even tougher for all of us to be able to maintain it. So you've got a few things here. I mean, obviously it's focused on social justice and giving people the opportunity to better their lives. And we've been talking about what we call generational poverty and the fact that owning your home, and we want to look at appraisal systems. And there's just so many things from a systemic standpoint that we need to evaluate. So the opportunity of having an organization that's focused on it, yes, it's a concept, but I believe ideas get put into action, and when ideas are there. So let's talk about how do we keep this momentum going? Because like you said, it was event driven, and yet, frankly, in my lifetime, I've unfortunately been witness to many changes and many events that are horrific. And I want to stand up whenever I can. And I, like you, when this all took place, went, oh my God, what happened? Have I become complacent on something? And yet we've been focused on diversity with our underground for a while, but this was beyond that.
Yes.
Yes. So how do we, I don't want it to be event driven. I want to keep the conversations going like we're having now. So what are your thoughts there?
Well, I think that is the issue and the question. We have to understand, I think we all do, that a very bright light shone on racial injustice over the summer. That light has started to dim, certainly through the election season, and as we move in, and with the crisis worsening once again. And I believe with every fiber of my being that if we're going to make a difference, we've got to do it fast, right? Because what we can do that's unique and I believe extraordinary is make an appeal. It's not just going to be a credit union for the HBCU community. It's also going to be a foundation, right? And these two institutions, intricately linked, right, are going to be able to compete for government dollars. It will almost immediately be a CDFI, a community development financial institution, and a minority depository institution. We'll also have a 501c3 foundation. So that will position the credit union and its foundation to compete for governmental dollars, for corporate dollars. I mean, we've all heard of the Netflix donations and commitment. We've heard of the Gates Foundation. We've heard of Verizon and so many other corporations that are leaning in and helping institutions that are helping people of color. There's so many other nonprofits now that are making similar donations and commitments. But if we're not positioned to be there, no better way to put it than we got to get while the getting's good, because these funds may dry up. So we've got to make it happen fast, and that's why we're working with our regulators on the federal side, on the state side. We're trying to figure out what's the shortest path to make this happen, because of that, again, fear that if it takes 2 or 3 years to start a de novo credit union, it's not going to, the country will have moved on. So we got to find a path to make it happen now. I am so heartened by and confident in the leaders in our space. I won't mention names, but CEOs of mega credit unions that said, what do you need? You need capital, you need resources, you need technology, count us in, right? Vendors, trade associations, all saying, right, we're here to help. Let us know what we can do.
Well,
We just got to make sure we have something that they can help with.
And that's what I was thinking. I was thinking that people often ask me when we're doing these conversations, they'll say, Sue, that's great. It sounds great. I appreciate the conversations. But how do you actually execute? How do you implement? And I think you've summed up probably the most critical thing, that as we look to the future of truly the cooperative space and the idea that we can serve members, and specifically in the Black community, we're in a position right now where we need that, if you will, roadmap, right? We need to hear, yes, Netflix and Hope Credit Union, and the idea that we have the people ready to step in. Now let's have the path to do that. And the fact that you're now taking a leadership role, you did it with student lending. I'm not going to lie, you took a lot of heat for that for a lot of years, and you hung in there and you said, this is my passion, this is what I'm going to do. And so I was very heartened when I saw that you were, if you will, going to be an activist in this area. And I'm using those terms because I want to feel that passion. It's not just about, hey, this is happening, let's lay out a plan. It's really about, we want to activate and we want to see a difference happen. And I like, in some of the work that I've been doing in recent years, I really believe we have to have metrics. We have to show the results of what we're doing. And so the strategic roadmap that you're putting together and the leadership that you're putting together, I can see where people are excited. So I want to, just offer, I'm raising my hand.
Wow.
And, when that happens, we usually get called in the credit union space. So I'm there to help in that respect. But it sounds like you've got the power players there supporting you as well.
Well, there are a few more powerful than you in this space, or respected than you in this space.
Thank you very much.
And let me make clear, this is a we, not me endeavor.
Yeah.
And, we've got just some great people who are, again, they're all in.
Yeah.
And if I can count you and others, like anyone else that wants to contribute to this effort, Gary Perez at USC, just give me a holler or send me an email, and we'd love to have anyone on the team.
Well, I will definitely, promote that and establish that communication trail for you. I want to say also that when you talked about the action and that we have to take action, I believe that people want the path, we want the light. And I also believe that this will create new opportunities. When we were, and I don't mean just this initiative, but the idea that credit unions are coming together, we have a tendency to call it a vulnerable collaboration. That over the years, what's happened is that we collaborated, but maybe not at the same level. And I'm seeing collaboration right now that is unprecedented for us in the last, probably 10, 15 years. And so this is one of those examples of that. And so I look to the future and I say to myself, okay, if we can come together and we can, work towards something that could truly change, people's lives, then maybe there's other possibilities that came out of this year, because it's been a tough year. So what other possibilities? I mean, when you look at where you are, is it our grandchildren that are the possibilities? Are we laying the path for them? What do you think?
Sure hope so. I'd say our children and our grandchildren, because even our kids, now my kids are probably a little older than most. They're in their mid to late 30s. And I'll tell you, young people today, they don't look at credit unions the same way that our generation does, or our parents' generation did. And I think that because they're more socially responsible, I dare say, than perhaps we were, that they need something other than a free checking account or a cheap car loan as the basis or the reason for them to bank with a cooperative. And I think these types of efforts, where we not only demonstrate our value and commitment to our members in general, but to society, I think will help gain relevancy, right?
Oh my goodness, I just 100% understand. I didn't mean to interrupt you, but I want to just emphasize the point. I think that a credit union purpose is socially driven. And I've always looked at doing the right things, good business, the idea of that. And I believe that our children, future generations, they understand the importance and the significance of these times. And we've seen on the news recently, and we're coming up to holidays, where people are faced with poverty, and there's just so much in society at our core that I believe people and the next generation care about. So if I can make a choice to serve or to be served by a group that's making a commitment to change, I think that's pretty powerful.
And doing it on a volunteer basis, right?
That's exactly right.
Basis that are serving as that conduit, that bridge that will allow people that need our help most to pay for college at discounted rates, to buy homes, to start or build or expand businesses. I mean, that's what this can be. I mean, at the core of the digital only concept is this notion of keeping costs very low, but also, by way of structuring it as a CDFI and MDI and with the foundation, we'll be able to subsidize costs, right? We will be able to subsidize rates so that we can allow those that are struggling with student loan debt, those alumni of HBCUs, to refi at ridiculously low rates. Same thing for alumni that are starting their business. And then students today, today's students, if we can help them with scholarships, if we can help them with grants, if we can help them with below market student loans, right? Those are the kinds of things made possible by a collaborative effort from within the credit union space.
Absolutely. So access becomes really one of the key points as we move forward, because I believe that what you're doing is reaching a new generation. And I think you're doing that, and you've done that throughout your career. You've been committed to your staff, you've been committed to the industry, you've been focused on, and I don't mean just you, but I believe that we have a whole generation, as we see this new generation, if you will, getting engaged. They're seeing it in a different way as well. So, so if there were 2 ideas into action that you'd like to send out to the folks in the industry, what would they be?
Think big. Think beyond that which we as individual credit unions can and should be doing for our members, and think more about how we might work together to do great things in our communities and for our collective membership. That would be at the top, and the second would be, whatever you do it fast, right? I've been guilty of this throughout my career, of having ideas and then letting them stew for a while, and then they go away. And what we have to do is we don't have a dearth of ideas or ways to help, but we do have overflowing plates, and we do have competing priorities, and there comes a time we just have to move them away and say, let's find a way to work together and make positive change fast.
Excellent. And so I just want to say to everybody, if you've got that commitment to write a check and be part of this process, let's do it and put it in an account and hold on to it, because as this gels, there will be, as you said, competing factors. And I'm seeing it, if you will, with donations in our industry, with support of such important initiatives. So I really believe that if they've got the emphasis to get engaged, let's do it. And also, let me just reinforce to everybody, go back and look up the commitment to change and make sure that you've signed up, that you're active. I think Renee Sadie-White is fabulous. And I think that the work she's doing right now across the industry, and now with you being on the board and the other volunteers that are part of it, they'll stay focused. And I'm excited to see that. And I'm so excited to reconnect with you. We haven't talked in a while. So yeah.
I was humbled by the invitation and really appreciate, this time together.
Excellent.